navigating the world of digital finance these days can feel, well, a bit much sometimes. Like being handed the controls to a spaceship with just 1,000 blinking lights.
Right. All these apps throwing data at you, charts, graphs, numbers.
Ooh, exactly. It's easy to feel more overwhelmed than actually in control.
That really resonates with so many people. I mean, we've seen these incredible leaps in digital banking tech, but sometimes the human side, our actual feelings and behaviors around money, kind of gets lost in the shuffle.
That's it. And that's precisely what we're diving into today. We're exploring how insights from, well, neuroscience and neuromarketing are being applied to designing banking apps and other fintech stuff. Our main source for this is a great article from UXDA called Applying Neuromarketing to Digital Banking Apps and Fintech Design.
And what's really insightful here, I think, is the shift in perspective. It's moving beyond just, features and transactions to really understanding the emotional side of managing money. And maybe more importantly, how thoughtful design can actually build trust and encourage those good financial habits we all kind of strive for.
And this is where it got really interesting for me. It turns out that when it comes to money, we're maybe not as logical as we think we are.
Not even close, often.
Our emotions play this huge role, often in ways we don't even realize. So our mission today is to unpack the key ways digital banking and fintech are using these psychological ideas to create experiences that are easier, sure, but also genuinely more effective.
Exactly. We're looking at how understanding, the brain's wiring can lead to apps that feel less like a chore.
Yeah.
And more like a helpful partner for our financial goals.
Okay, so let's get into it. The article kicks off by talking about how deeply our emotions and financial decisions are linked. They even mention Daniel Kahneman, the Nobel laureate.
Oh yeah, Kahneman's work in behavioral economics. It really showed us we don't always make purely rational choices, especially with money involved.
That's right. His work really shone a light on our biases, our emotional states.
And what's fascinating, based on the neuroscience, is that even really small positive things in a banking app can have a big impact.
Like the example they give celebrating saving just $5. It sounds almost trivial, doesn't it?
It does, but apparently it works. Yeah. It helps build those positive habits over time.
Little wins, right.
Exactly. Think of them as small wins, like the article says. They create momentum. It's about tapping into that feeling of accomplishment, even a tiny one, to reinforce the behavior. And this ties right into those unconscious habits and biases we all have.
Right, like loss aversion, the idea that losing hurts more than winning feels good. Kahneman and Tversky's work.
Yep, that feeling the pain of a loss much more intensely. And then there's mental accounting, which Richard Taylor talked about how we mentally put money in different buckets.
Fun money versus bill money.
Exactly. These biases are super powerful. Loss aversion can make us too scared of investing, maybe. Mental accounting might mean we spend fun money easily, but agonize over dipping into savings.
Even if it doesn't make logical sense overall.
Right. And the key thing is, these apps are starting to design experiences that kind of understand these tendencies and work with them helpfully.
Now, this next point really made me stop and think. The idea that sometimes less information is actually better.
That feels counterintuitive in finance, doesn't it?
Totally. The assumption is usually more data equals more control, better decisions.
It flies in the face of tradition, really. The old way was often just bombarding users, detailed charts, endless product options, tons of fine print.
Yeah.
But as research by folks like Kenning and Hubert points out, that often leads to cognitive overload. Your brain just gets maxed out.
Too much choice, too much data. So you just freeze.
Pretty much. It's easier to do nothing, even if that's not the best financial move.
So instead of overwhelming us, the focus shifts to simplifying things. Clearer choices, guided experiences.
Precisely. That's where you build trust and satisfaction. A clear, single interface isn't just prettier, it's actually more effective. It helps users understand and feel confident.
Neuroscience shows reducing that mental load makes the whole thing feel less scary, more reassuring.
Absolutely. And this connects directly to understanding the brain's reward system.
Yes. Dopamine. They really stress how crucial understanding dopamine's role is.
If financial products can be designed to give that little bit of positive reinforcement for good habits, that can be a real game changer.
Dopamine's the neurochemical for pleasure, motivation, reward.
Right. So by designing experiences that trigger its release, even through small positive feedback loops, these apps can make managing money feel less like a drag.
And more rewarding. Actually rewarding.
Yeah, genuinely rewarding.
Okay, now this idea of building an emotional brand connection in finance, That was another one that surprised me. You don't usually think of having, like, feelings for your bank.
Huh. It's a common thought, but research, like from Plassman and others, suggests otherwise. Finance might seem transactional, but people are actually more likely to stick with platforms where they feel some kind of emotional connection.
It's about building a relationship beyond just the services.
Exactly. And the article mentions storytelling connecting your financial actions to personal goals, like saving for that vacation or for education.
That makes so much sense. It makes it feel real motivating.
It really does. It links back to Damasio's idea that emotions are integral to rational thought. When you link finances to your actual life goals, the app feels less like a tool and more like a partner. It adds that human touch.
Which leads naturally to dopamine design. I love that phrase.
Me too.
It's all about those little micro celebrations, right? The small animations, the congrats, messages when you hit a small goal.
Yep. Paying off a tiny debt, hitting a weekly savings target.
No.
They seem small, but they can trigger that dopamine release and reinforce the good behavior.
Those little bursts of positive feedback,
Yeah,
they actually shape our habits.
that can be surprisingly effective. And it extends to gamification features too. Progress bars showing how close you are, streaks for being consistent.
Ah, yes. Progress bars and streaks. They tap into our desire for completion, progress, reward.
Definitely. Research by Burns and others found these kinds of predictable rewards activate those dopamine pathways. Keeps users engaged.
That feeling of seeing a progress bar fill up or keeping a streak going, it works. The article points to the Capital app as a good example of gamification in saving.
Yeah, Capital really nailed that, making saving more interactive, more fun through goals and rewards. It shows how these psychological ideas can work in practice.
So when we talk neuromarketing here, it's not about tricking people, is it? It's about using these insights into emotions, habits, rewards to actually help users.
Exactly. It's about understanding the underlying drivers of our financial behavior and designing experiences that work with them, not against them. UXDA, the source article's authors, use their framework to translate this brain science into practical design choices that build trust.
And they bring up nudge theory, too. That's fascinating. Guiding users towards better decisions without being pushy.
Thaler and Tunstein's idea. Structuring choices so the desired outcome is easier, more likely, but you still have the freedom to choose differently.
Like maybe highlighting a sensible investment option as a starting point.
Yeah, exactly. Instead of just showing you 50 complex funds, maybe the app subtly points towards a well-diversified, low-fee one. You can still look at others, but the nudge steers you gently.
And again, it comes back to simplifying things, cutting through the clutter. Intuitive visuals, clear language.
Absolutely key. Minimalist dashboards are great for this, showing progress clearly, like you're 70% towards your debt-free goal. That reduces anxiety and keeps you engaged without drowning you in data.
I like the point about embedding small habit loops with positive feedback, like timely bill reminders or personalized spending tips.
Those are great examples. They turn occasional interactions into regular helpful routines, gentle prompts, reinforcing positive actions with little acknowledgments. It helps build good habits almost without you noticing.
Like getting a reminder to sweep a bit into savings right after payday.
Perfect example. That consistent positive reinforcement strengthens the neural pathways, making the habit stick. Berridge's research backs this up. Consistent pairing of behavior and positive feedback makes habits much stronger.
Okay, so the article introduces UXDA's own concept, dopamine banking. What's the core idea there?
Well, dopamine banking, as UXDA sees it, is basically a deliberate strategy. It's about applying these neuromarketing principles specifically to make banking feel more rewarding and engaging, designing services with the brain's reward system in mind to benefit the user.
And they've got 10 key principles for this.
Yeah, 10 principles under this dopamine banking idea. It's quite a framework.
Okay, let's maybe unpack a few of those. The first one, emphasize positive reinforcement.
Right, we've touched on this. It's those small, immediate rewards, a little animation when you pay a bill, a success message when you set up automatic savings.
That immediate feedback loop.
Exactly. Berridge's research supports this immediate positive reinforcement makes you more likely to do it again.
Makes sense? What about the second one, using gamification?
That's bringing in those game-like elements. Progress bars for goals, challenges like saving X amount per week, streaks for consistent good behavior.
Like we saw with Capital.
Precisely. Burns and others show these predictable rewards and tracking progress trigger dopamine, keeping you motivated.
And personalization is another key principle.
Huge. Tailoring the experience based on your data spending, goals, activity. It makes the service feel much more relevant. Adaptive dashboards showing your top spending categories. Maybe a notification like, payday, want to move $50 to your vacation fund.
That feels helpful, not intrusive.
Right. And Kenning and Huber's research shows this personalization boosts engagement and trust significantly.
Okay, number 4. Reducing anxiety through emotional framing. That seems really important given money stress.
Oh, absolutely crucial. This means using a friendly conversational tone, ditching jargon for plain language, using visuals to tell a story, like showing your path to buying a home instead of just account numbers.
Making it less intimidating.
Exactly. Damasio's work showed emotions are key to decisions. Making finance feel approachable improves trust and engagement.
Then they talk about leveraging loss aversion and mental accounting. How does dopamine banking use those?
By working with those biases. For loss aversion, maybe a savings-first strategy frame saving as protecting your future, not restricting spending now.
Ah, clever framing.
And for mental accounting, provide spending summaries broken down into categories that match how people naturally think: groceries, entertainment, rent. The idea, drawing from Kahneman, Tversky, Thaler, is to gently nudge responsible behavior.
Simplifying complex decisions is another principle. Choice architecture.
Yeah, focusing on how options are presented. Instead of 50 credit cards, maybe show just 2 or 3 well-explained ones relevant to you. Using smart defaults. Pre-selecting a sensible option for those who want a quick decision.
Again, reducing that cognitive load.
Exactly. Kenning and Hubert showed this boosts satisfaction and trust.
Encouraging habit formation is high on the list too.
Through consistency and reward. Making recurring savings plans super easy to set up, automating transfers so saving becomes the default, gentle reminders to check progress.
Building those routines.
Barrage's research, again, consistent behavior plus positive feedback strengthens those neural pathways, making good habits stick.
Then strengthening the emotional brand connection itself.
Going beyond just function, cultivating a relationship, weaving a relatable brand story, showing values aligned with user goals, using meaningful touch points, personalized messages for milestones, birthdays, making it feel human.
Builds loyalty.
It does. Plasman's work suggests strong brand cues can activate reward pathways, reinforcing trust.
Nearly there. Number 9 is incorporating dopamine design itself.
This is really the heart of it. Intentionally designing interactions that give timely, positive feedback, even for small wins. Introducing fresh challenges, progressive goals to keep things interesting, sustain that anticipation and reward.
Keeping it engaging over time.
Vital for motivation, as Barrett highlighted.
And finally, number 10, nudging financial health.
Using those subtle cues, like Thaler and Sunstein described. Guiding people towards better choices without forcing them. Maybe auto-enrolling at a slightly higher savings rate, but making opt-out easy. Or timely prompts like suggesting investing a bonus.
When done right, these nudges can really help long-term well-being.
Potentially, yes. Significantly.
Wow. So bringing it all together, it really feels like a big shift is happening in how these financial tools are designed, moving away from just data.
Yeah, away from a purely rational view.
And really acknowledging the huge role of our emotions and habits in how we handle money.
That's a great summary. We're learning that finance behavior isn't just logic. Biases, emotions, routines are massive factors. Ignoring the human side limits how helpful these tools can actually be.
And as the article showed, there are these key neuromarketing strategies proving effective. Leveraging the reward system, creating emotional resonance, personalization, understanding biases, smart choice architecture, and fostering good habits.
And the crucial point is, when these are used ethically and transparently,
Right, ethics is key here.
they really can empower users, leading to better financial well-being, more satisfaction, more trust, more loyalty. It's about meeting people where they are psychologically, making finance less stressful and more successful.
So for you, the listener, as you go about your day, maybe take a second look at the financial apps you use. Can you spot any of these neuromarketing techniques in action?
That's a good challenge.
How do those little design choices influence how you behave, or maybe just how you feel about managing your money? Definitely something interesting to chew on.